Doc here from North America. Good morning, good afternoon, and good evening. It's another fun-filled day. Hey, Janos, how you doing? Doing a little dancing here on a Monday. We had a file that was corrupted, and it is irritating at best. I can tell you that. Just at worst, it's like, give me... I got razor blades here, so I'm actually thinking about cutting something. But anyway, the end result is that here we are, and let's get rocking and rolling. How about that dollar index, huh? Geez, it just doesn't seem to want to stop. Oh, yeah, I had it up there already. Let's put it up on... The Ducascopi's got it right there. The J4X has it. See it? All that red. Wait a minute, that doesn't make sense. Oh, that's the S&P 500. There it is. There's the dollar index. I mean, it just keeps on marching north. It will not let go. Hey, 47, how you doing? It will not let go. It's hard to take serious in the sense of, I guess, we see gold down, dollar up, and you start to always question, the reality. I got some people always trying to tell me that gold standard is coming back. I can't even imagine the gold standard coming back. I don't think there's enough gold in the world to satisfy the size of the economic market that we have now for a gold standard. I mean, it's one or the other. You have to take an ounce of gold and move it up to something crazy like about $15,000 to balance it out. So I mean, I just don't see that. With all those manifestos and these thousands and thousands of funds. And what that would do, I mean, you see what happens when interest rates rise. When interest rates rise, you can see the weakness in the equity market because they have a manifesto of their incorporation, be it a mutual fund, a retirement fund, a hedge fund. They're all incorporated, and they have a manifesto that says what they're supposed to do, basically. Not perfectly, not down to the exact, but enough that they can get sued. And so they will stay inside those lines. In other words, they paint by the numbers. They color with a crayon inside the lines. And they're not going to basically move away. And so, if when I get emails from people that say to me, basically, we're going to go back to the gold standard. And I go, I don't know how. I just don't know how. IMO metals are experiencing a buyer strike. U.S. dollar strength is the culprit. I'll tell you the truth. I think it's the central banks that are just banging it down. I think that they're trying to hold it down. Because I heard that for every three-quarter point increase in Europe of American interest rates, or maybe it's over there, but I think their margins are lined up with the American interest rate. So in other words, it's a $15 billion margin call on all the trading funds and mutual funds and all that combined together. It's a $15 billion margin call. So they have to dig up $15 billion. And they're not going to waste their cash, so they're going to liquidate some of their position. And, I guess it's a combination. They'll put in 10 or 15% of their extra cash, and they'll reduce 60 or 70 or 80% of their position. And so when you have this, I want to call it's like a domino effect, where funds can't do logical investing because they're trapped with their legal manifesto. It's a so in other words, when we look here on the markets and we talk about, Rob and I just got done writing an article about proactive versus reactive, and when you look, we talk about, you see the dollar index here. You see we went into the buy. I guess it's right there at this point, right? That one right there. Let's put that line in there. So there's the daily buy. Okay, so this is the quantitative side. This is what I as Yano says, people tune in to see the numbers and what's going on. Okay, and you see we go into a weekly buy here, we go into a daily buy there, we go over to the J4X, and we got the green hinky bars. That's a signal there. This right there, and then we have the green line and the orangish or yellowish dashed line. Okay, and it's above it, it's bullish. You see all that, and it's rising. And when it's below it, it tries to correct. Okay, so that is a quantitative tool that makes more accurate decisions than fundamentals. Yeah, I agree, Robin. It is a combination of both. I think that funds are just going, okay, we've had it. It's. Where's gold today? Let's just take a quick look at gold. I think gold is at 1,600 and change. I thought they were going to build a base in the 17s at least. Where's it at now? 1649 with a low today of 1633. All right. We have 8.5 inflation or 8.3 or whatever it is inflation number at this point. I can't even take it serious anymore because no one seems, besides me and a few others, they're the only ones that take it serious. When it comes to the president of the United States and everybody else, he tries to tell us it's at zero again. And the media loves that. They go, oh yes, it's the inflation's at zero. Boom. So when you have this crazy, and that's what it is, crazy level of acceptance of physical reality, financial reality. Giannis used to do these webinars, not webinars. He did these webinars, and it was like how to trade fundamentals. It got to a point where he took them off because fundamentals last 10, 15 seconds. It comes out at 8:30 our time or whatever, and it lasts for 10 or 15 seconds. Fundamentals used to last for days. So in other words, data came out, it said this was good or it said it was bad, and more than likely it was a follow-through, up and down, but if it was a bullish thing, it would go up and down, but make higher highs and lower and higher lows. Higher highs and higher lows. We're at a point now, it's gone. What's that? Giannis says, they matter nowadays. They are starting to come back, aren't they? In other words, it's the inflation and the interest rate that's the fundamental that's being followed. Namely, since 2000 crash, employment mattered, and recently CPI impacts. Exactly. They're the two that are impacted. But when it comes to everything else, it seems like they've walked away. It's like, Giannis, that's a perfect example of what you've been trying to tell people for a couple years now. The fundamentals are totally manipulated to a point where they pick and choose, the central banks pick and choose which ones they want to follow and which ones they don't want to follow. Does that make sense to you? They are truly picking and choosing. And so they throw out all the other fundamentals that doesn't matter as much. Yeah, exactly. Okay, just making sure I'm not crazy. That's what I need you for. You and Robin keep me anchored, tied down to reality. Because sometimes I look at this and I go, am I wrong? Am I crazy? Am I in a nursing home right now and this whole thing's a fantasy? Yeah, he really did. Didn't you find him to be more... Last week, Powell was the most forceful, deliberate Powell I've ever seen. Didn't it look that way to you too, Giannis? The core PCE price index is defined as personal consumption, expenditures, existing food and energy. Exactly. The core PCI volatility caused by movement in food and energy prices, underlining inflation. Yeah, exactly. Good question. Good answer, Janos, and good statement, Robin. Yeah, I've never seen a pal so forceful and so aggressive. I think he said, at one point he said, someone had asked the same question like 6 times. No, reverse that. The sixth person had asked the same question that the other 5 had asked for the 6th time, and he said, I'm just going to keep on repeating myself because I'm not changing my answer. And that is what we've been seeing. So, all right. So what we're going to do is we're going to drift over now to, to basically look at the quantitative side, because it seems to be the more accurate way of reading markets than anything else. So let's get back to the currencies, and we'll take a look at the euro. But you know what I wanted? I just want to do this one thing. I just want to go back to the dollar index again. You can see it there on J4X. I just want to throw it back up on. I mean, you can see it. Look at that. I mean, it's banging away at all-time highs. And when we go and look at J4X, look at that. What a monster move. Look at that. Just a monster move. You know, from 21. Look at that. It's just a monster move. There's no other way to describe it. All right, let's jump over to the euro. I saw the euro this morning. I was really surprised. I thought it would be weak, but I didn't think it was going to be that weak. All right, there's dollar euro up on J4X, banging down. You can see a little curve here in the green line. So they're trying to bottom out, and you can see we're way down on the stochastic there, the fast versus the slow. And let's put the euro up on Chicago Quant right there. Yeah, they had, when I turned on these things in the morning, look at that. Look how low it was. It was down in the 95s. It was like, my God, 95s. Here you go. DAX and S&Ps. Let's go jump over to them and take a look. They have been rallying back. I've seen that much. Not a lot, but they're not that much down. A couple hundred points is kind of noise, you know, more than anything else. You can see here, and they seem to be trapped in a range here. You see they're not taking out Friday's high, and they're not taking out Friday's low also at the same time. That's the S&P 500. You know, we've been in a daily sell since here. Been in a weekly sell since back in here, back in the 4,000 area. And here we are at the 3,000. I guess today's low is, Friday's low was, they broke the low of 3660 compared to the June low. Was it the June low? Yeah, there's a June low. No, June low is 3657. All right, so it's on the edge. And so it didn't take the 57 out. It went down to 660. And there's the S&Ps. It looks like they're trying to do a little bounce here. You can see that right there. You got to figure some money. You know, I mean, there's a lot of cash out there. Some money's got to be nibbling. Even if you buy it and sell calls, you know, it's got to be doing something there. Let's check out DAX. Right there. DAX, it's not trading yet. It won't be trading for another 16 minutes here in the States. And they don't allow us to have the futures contract. So, and then I know it's down. You know, I saw the DAX down. Let's put it up on J4X. Whoop. Let's try that again. Let's see. DAX. German 40. There we go. And you can see that's marching down, trading at the 12,269 area. So they're putting pressure on that, like everything else. You know, it's constant, steady pressure. And having the euro dollar pairs trading at the 95 area, 95 and change, is obviously it's like a margin call. You know, I mean, you're looking, and I think, you know, a perfect example of that is when we look at the dollar Turkish Lira versus the euro Turkish Lira. You can see they're basically trading at parity. At one time they carried like a couple hundred handles premium. Now they're just kind of trapped. All right, from there we shoot back to the currency. I hope that took care of you. How about the Nikkei? Don't you usually look at the Nikkei? Let's take a quick look at Nikkei while we're in this neighborhood. There it is right there. And there's the Nikkei. And the Nikkei is down too, and it's breaking its low from there. And we have seen the yen is back into the plus side this morning. All right, let's jump over to the, there's the euro. Let's go back to the cable now and see what the cable's doing. Wow, cable's actually plus for the day now. They took that thing down into the, what's that, the 103,350. Like, what's that, all-time lows. And let's see what it looks like over here. I bet we're seeing curves on J4X where the green line is trying to lift. Right there we go. Yeah, look at that. Extreme. Right there. Look at that. It is pressing fast and hard. And we're seeing the same thing down here on the weekly, and we're seeing the same thing here on the daily. So, we're watching and waiting, because we've been in the daily sell since up in here, and we've been in the weekly sell since up in there. So it's been a while, and you got to... Oh, no problem, 47. No problem. Always glad. We love putting up different charts to see where different things are. We do our normal rhythm every day, but we don't have to do that normal rhythm. Someone can stop me, and we can go look at something else. I always no problem finding new things to look at. All right. From the cable, we drift over to the Swiss. I imagine the Swiss is doing the same type of rebound as everybody else. Right there. Not as much as I would think. I would have thought that would have been like down right here. There it is on J4X. Lifting strong. Green line still through. The fast is moving well beyond the slow. Over on Chicago Quant, like I said, I would have thought this would have been backing off more down to this area right around there on the Swiss. A little surprise, nothing major, but a little surprise. Yeah, that's the action we're seeing. It's trying to head back towards the top end of the range, which is kind of surprising. But then, King Dollar is being King Dollar. The only excuse I can find why they're racing towards the dollar so fast is, just they just want safety. I guess that's what it really comes down to. They're looking for safety. I can't imagine anything. Also interest rates look like they're going to the 4s and the 5s at this point. We're looking at we have. Let's just do a little interest rate peek at what's going on. Let's see if we can find it here. So, where's it at? Open. Oh, I want to do this too. Let me do this. I like to see what the thing is doing. So I'm just going to do a Control R for a second. I don't think we're going to lose anything, guys. Just trying to open up something. There we go. Okay, 4.3. That's not too bad. And let's see if we can get an interest rate up there for us, and see where all the interest rates are. Let's see, trading. Not that. So normally I have it here. I don't want live TV. And pre-markets. Let's go to markets. Pre-markets. Pre-markets. There we are. And then let's see if we can get into bonds. Currency, interest rates, bonds. There we go. And let's just take a peek. I'm going to bring this over to you like that. It gives a good view of all the interest rates around the world. So you have there, you can see the U.S. 1 month, just 30 days, is trading 2 and 3, 2.65. 3 month is trading at 3.21. 6 month is almost 4% now. The 1 year is over 4%. And then after that, 7 year stops. It stops at 4%. In the 5 year, it goes back into the threes. So there's your 30 year at 3.6, your 10 year at 3.7. Now here's government bonds in the UK. The 2 year is at 4.5. The 5 years at 4.5, and then the back months, the 10 goes almost to 4. It's almost tied around. But look at the 30 year. There's the German bonds. 10 year is trading at 2. 20 years trading at under 2, and the 30 years trading under 2. So they're not exactly giving this stuff away. That's in other words, they're not. It's not like a big bargain, but it's definitely worth looking at. Let me save that. Trading more. Oh yeah, save. There we go. This way I don't have to hunt for it so hard next time. Because it's definitely where that's one of the fundamentals that we talk about We've talked about that. What we're just talking about 6 minutes ago about Janos and the fundamentals, and they seem to follow two fundamentals now, and that is it. They like two, and they don't care about the rest. It's crazy. It is crazy. So there it is, the Swiss. It's obviously interest rates and it's pressure of the margin calls. That's a combination of it all. Manifestos and corporations, the whole bit. All right, from there we go over to the Turkish Lira. Let's take a look at the dollar Turkish Lira. There it is right there. And we're going to put it up on J4X, and then we're going to leave it on J4X when we show you the Euro Turkish Lira and see the differential between them. So it's trading at all-time highs at 1845 now with a high of 47. And you see that pressure on it. I've been in the daily buy since there, and you can see the weekly buy since February, since all the way back in early mid-February right there, the week of the 17th close. Yeah, that's the yen is... let's jump over to the yen. We can do that real quick. There it is right there. It was plus this morning. Now it's backing off again. Yeah, it's doing the 15. Oh, what, the yen? I mean, 145, right. Yeah, it was doing that this morning, and we were green at one point. I think I sent a chart out. I think the chart went out as that. Let me just show you what the chart... We have a client that follows it. So, let's see, where is that at? Right there. There it is. This is what we put out this morning. We were looking at it. It was, this morning when everything was getting crushed, it was trying to get into the green, and then it fell apart again. So, and obviously that weekly is not stopping. This is the 6th week now in a buy. Yeah, I saw a headline last night. It said something like, Bank of Japan cannot save the yen. It's been... they didn't use the word interfere, but what did they use it? It's been, they've been in there buying it, but money is moving around that. They just can't. It's it's pretty much that's where it's at this point. I think that is the canary in a coal mine. I know many a time I try to say this is a canary in a coal mine or that's a canary in a coal mine, especially platinum. We have found that. Look at platinum last week and the yen. They have been strong leaders of their area. So platinum's been a very strong leader, but it hasn't gone anywhere. In other words, it's trading. Matter of fact, that's kind of interesting when you really think about it. Platinum is the spread is shrinking because gold is dropping, not because platinum's going up. And the same thing with the yen. The yen against the dollar is taking out 28 and 29-year highs now, 3-decade highs in Japan. And the Nikkei is, trading, where is it at? It's trading at 28,000, something like that. And, the all-time high is 30. It's still 25% below its all-time high. So, alrighty. From there, we go to, where are we going to go? We're going to go over to, that was the yen. So we were just looking at the Turkish Lira. So let's see Euro Turkish Lira right here. So we got a Turkish Lira pairs trade with the Euro trading at 17.88. You see over in J4X, we got the dollar one trading at 18.45. I mean, big influence there. You can see the big difference between the two. And that's that example of the interest rate factor where the euro is holding pretty fair. It trades like a currency, whereas the dollar Turkish lira trades like an index. It's not ebbing and flowing like normal currencies. It just keeps on running one way because the influence of the interest rate, and obviously the liquidity from Turkey to the United States and so forth and so on. It's all that combined together. The fundamentals, as Janos says, they're starting to pay attention to a few of them. But it's the bigger question is it the Federal Reserve paying attention to those particular ones, not the traders? Because the traders get in trouble every time they try to, use those tools. So there's the Turkish Lira. You can see that. It's right on the edge of trying to get back into the buy. It's been in a weekly sell for this little slide here. Whereas it trades like a currency. Whereas again, over here on J4X, we look at dollar Turkish Lira, it just rampages. It's just, it does not respect the ebb and flow like normal commerce for currencies. It doesn't. It goes one direction. Whereas you see here, when you look at it on J4X, it ebb and flows. It acts like a currency. That's why I call the dollar Turkish Lira, it acts like an index. It's like as if it's like as if imports and exports have no influence at all on the dollar Turkish Lira. It's like they just have one direction. That is, they don't like it, and they're making it harder and harder every month to be using it. That's what it really comes down to, which is kind of an odd thing, really. Because it should be a currency thing. It just shows you how much our situation is with that. It is. It's an interesting thing. And so I guess the real answer to all of it in the end is that let me think. I do have an answer there somewhere. I guess in the end result is that the dollar pairs trade is very harsh to other pairs trades. And we used to have a fellow on here, Janash. He was a Canadian. And I think he's living in Thailand right now. He moves around. He's single, so he bounces around. And trades out of different parts of the world. But he goes back to Canada every so often. And we see him. He used to do webinars here. And we used to do a joint webinar once in a while on Thursdays. And we used to talk about that, how the dollar pairs trade to all the other currencies is so much more weaker. In other words, it's one directional more compared to the other pair trades, like the GBP against the yen, or in other words, they're much more what we refer to as the minor pair trades. Officially, for decades, there was always like 6 major currencies. Okay, you had back in the old day, it was obviously the Deutschmark. Now it's the euro that's replaced it and combined all those things together. It used to be the British pound, which it still is. The Japanese yen against the dollar. These are all dollar pairs trades. The Canadian against the dollar, the U.S. Canadian dollar against American dollar, and the Swiss franc, or the U.S. dollar against the Swiss saltine, or the franc, what do you want to call it? And then and then it was the kroner against the dollar. They were the 6 major pairs, and the Swiss and the kroner were like the smallest of them all. But now, when we used to take this apart years ago, that the minor pairs trade just as active nowadays as the major pairs. It's all because the central banks are the ones involved in it. They're controlling these things. They're the buyer of last resort. That's what it really comes down to. They are influencing the market every day, every hour, every minute. Whereas before quantitative easing in 2008, I know it's starting to get far away now. We're in 2022, getting ready to go to 2023, and it's like 15 years now that it's been quantitative easing. This was all because the financial system collapsed back in 2008, and they hid it by doing quantitative easing. And most people thought, I have my money, I don't care. We survived, we're okay. My retirement fund is doing great, so I don't really care how it happened. But in the end result, is what it did is it slowly damages and has been damaging the financial markets when it comes to fundamentals and interest rates and inflation and labor and just all the basics that have been a decision-making process, when to invest and when not to invest in something for now 15 years. So, all right, from there we go over to the Canadian dollar. And when we look at the Canadian, we normally look at gold. And as you can see here, Canadian's been ripping up, just taking out, big highs. When's the last time we've seen it this high up? I don't see that. It's been a while. It's been a couple of years it's been this high up. It's well out of the range now. Especially these last 3 weeks, it's just jumped out of the range aggressively. And so let's take a look at, this is what we're going to do. We're going to throw crude oil up on J4X, because we always look at crude oil and Canadian together, because they seem to have a strong influence with each other over the years. And so there's the crude oil, and crude oil is falling. And what is Canadian? Rising, of course. That's the nature of it. And so then we switch it here on the webinar here, and I put in crude oil right there. And you can see this, downwardly drift. And you see it has ebb and flow, so it is showing supply and demand. And that's what we call a clean market, because it reflects buyers and sellers every day, and that's what you want. You want that ebb and flow. And you can see we're at, 5-month lows now, 6-month lows. We thought it would be trapped in the 90ish area to the 115 area. But they've broken, you could see for a while here, they hung around and orbited the 90 area and making 85 lows, and we kept on calling it the 90 area. But we can honestly say now it's done. They've broken that, that's for sure. Now some say that it's happening because of, we're going into stagflation. We have no growth. And so inventory is diminishing for that reason. And at the same time, you can see here, we're seeing lows of there it is, basically late December of last year now, before the invasion of Russia into Ukraine, to Central Europe. Russia invaded Central Europe, and it's got things really kind of crazy. So, and that's the light crude. Now what we do is we put Canadian up on J4X and just show you, the same nature of it all. Right there. There we go. And you can see that right there. See that strength. And we see the weakness in the oil right there. All right. And then we do the same thing with the South African Rand. We go to that next. Might as well put gold up there, so we'll do this. We'll put gold up on this one first. And there's gold. And you can see gold is doing that same thing, drifting south, going down in value. It's fallen from basically 1750 area, now down to 1650 area over a 2-week period. And at the same time, we see the South African Rand right there drifting up. Again, that pressure. With that pressure moving up, we see gold moving down. And then when we reverse that out like so, let's see, what are we doing here? Oh, let's do this first. And as you can see, daily sell for pretty much that whole move, and weekly sell for that whole move. So it's been telling us the math, or the early, the quantitative side of our point of view all the time is, accurate, very accurate. That's a bad way of describing it, but it's giving us the correct trend. Let's put it that way. All right, and then we go and do the reverse. We go and take a look at gold itself right there. And you see that downwardly drift on J4X. And again, we go and shift over to the currencies. And there is South African Rand. And you can see the same situation. So we go into the buy here. And it's been in a buy ever since. Pressing up. We've been in a weekly buy since back here. Right there. There's the weekly trend. And it's been just marching up. As at the same time, we see gold over there on J4X marching down. So there are pair trades out there that do are influenced by some of their main commodities. I'm sure there's others out there, but these two are the most prolific. Gold and South African Rand, which is the most accurate as I've ever seen, really, and Canadian and the dollar. The Canadian dollar with oil. And we have seen at times The Kiwi used to be a good pair. They called it the loonie trade. I know that the gold coin in Canada is the loonie, but they call it the loonie trade. And it's the New Zealand against the. Let's put it up there. We used to watch it all the time, but it's gotten to a point where we watch the oil now more. But it's the New Zealand right there. It's been on that long down drift, and what's the oil been doing basically? Let's put oil again on J4X. No, that's gold. Right there. Same thing. And that long down drift. It topped out. The CAD topped out here in what was it? It was like the high was back in August. We went to a weekly sell a couple of weeks later. We were in a daily sell, just about literally on top of the top out right there. We went into the daily sell. We finally got into the weekly sell right there. Pressure was on. It was a small little profitable trade. And then we went into a sell, backed off again. We went back into a weekly buy, but we stayed in the daily sell, so you couldn't get long. Then we went into a daily buy, but we were in a weekly sell. So then you couldn't get long. You couldn't get long again. So it was keeping us honest. It was keeping it honest on the trend. And you got into a daily sell right there, and you see the pressure on it was just sideways down. It got into the buy right there. Let's put that in there. No, it didn't get into buy because it's a red dot. No, yeah, it did. Right there. There it is. Got into the buy there. We can move this over too, probably. We should have done that, like that. Got into the buy there. And put the official one in like that. There it is right there. And then the next day it went into the sell again, right there. And we went into the daily sell in that weekly sell. And finally it gave us a trade. Sometimes you get, I said this to a friend yesterday. They called me. They want to buy bonds. And they said, I went to my broker and they offered, boy, I'll tell you, the broker, who was it, Citibank, offered them a horrible deal. And they called me and they said, does that make any sense to you? And I said, no, it don't. Don't do it. It was like, if they gave them if they put 200,000 in the account, they would give them a half a percentage point. And I said, okay. And what happens if you buy stuff? They said, well, they take it away. It has to be 200,000 in cash. I said, don't do that then. Just go and buy government bonds instead. They're trading at 3%. So, over 3%. Don't take a half a percentage point. They offered them $2,000 cash if they put 200,000 in their bank in their bank account or trading account. But then if they take the money, they lose it. They have to leave it in there. So it's just a sham, But in the end result is that I said no, don't do that, blah blah blah. I've already repeated myself. All right, so you can see here. Oh, I know what it was. Why I brought that subject up. I told them, I said, there's always three ways to make money in a market. There's buy low, sell high. That's what we like to do in the States here. Okay. Then there is sell high, short, and buy it back cheaper. That's the second way to make money trading. And then the third way is to do nothing. Sometimes you don't get a direction. And so don't have a position. Be neutral. Now, if you have a position on, you can put collars on. You can use binaries and so forth. You can use options on different ways to hedge it. But there are really three positions: long, short, or neutral. And in a case like this, the NASCAD, goes into the sell here, but we're in a weekly buy, so it's kind of keeping you out of the game. Now, obviously, if you're a company or something that's using the currency, that's a whole different story. All right, but you have other ways to adjust your gamma and your delta, for hedging your product that you're you're selling internationally. But when it comes to trading these products, like here, we're in a sell. It gives you a chance to sell a little bit here, but it slides right back into the buy. So I mean, it's a very small win. And when it finally does get into a buy, we're in a weekly sell again. So this weekly buy, you never get a chance to get long in it. And so the sell, putting the two together, the daily signal with the weekly signal, keeps you very safe. And that's really the answer to the whole game, is you don't always have to make a trade. Sometimes there's a reason to just not make any trade. In this case here, They finally give you the sell signal right there, and we're in that weekly sell, and it says, okay, get short. And, in the end result, it's a winner-winner chicken dinner. All right, where do we go from here? That we were just pointing out the NASCAD compared to the Canadian oil, Canadian dollar against the oil trade. All right, from there we jump over to the yen, like we did earlier with Janos, and you can see that it's trying to lift back up, and we're getting very close. It's only 6 ticks away from getting back into the daily buy. We're in the weekly buy, so it's a perfect one. This sell-off here was very clear. Do not try to get short in it, because why? We're in a weekly buy. Now, obviously, if you're an exporter-importer, it's a whole different situation. You have to shift your gamma, and so forth for your hedge. But that's a different, because then you're, in essence, if you're an importer-exporter and you're trying to hedge your currency risk, in essence, you have a straddle on. You don't realize it, but you have a straddle on because you already own one side of it, the product that you're trying to export. Or you've bought it and you own it outside the country and you have to convert to whatever value it is to yen. So it's a natural straddle. You already have half of it on, so you just go and you put the other side on, being whatever. If you're long, foreign currency and you need to convert it to yen, then you would obviously want to own the binary side of the call of it. In other words, you want to protect the upside or the downside. Just in other words, you already own it one side, then you want to get the short side on. So if you're short one side, then you want to get the long side on. That's how that works. We talk to clients about that every so often when they need it. How to put together use the hedge correctly, not just go sell a forward contract or the pairs trade, because that just puts you out of position. I mean, you're done. You've sold it. It's all over with. And sometimes it's well worth it, probably. But there are other times where you're stuck in a situation importing and exporting for months of the same inventory and the same product, and so you need to hedge it so you don't lose potential profits. All right, from there we go over to the last one, and that is south of the border. We go take a look at the yen. Not the yen. I'm sorry, the peso. Right there. There's dollar peso. We kept on thinking this thing. Oh, look at that too. Just last week, just as we thought they were going to try to get it into the weekly, it did not. It bounced. That daily, we were convinced that it was going to support the range. For some reason, the Mexican peso now, the Canadian and the Mexican peso both were very good at holding on to the range for the last couple of years through the inflation situation. All the other currencies have changed their trading ranges due to inflation, interest rates. Now we do see that the Mexican peso is the only one left, the ones that we follow, that is staying inside its range. It's not really moving. So what we see here, here's the range, and that black line is the range. That's the bottom end of the Fibonacci sequence. There's the top of it, and it's staying inside its range compared to the Canadian and the rest of them, which they've stepped out of. There's the range there for a long time, and it took a while for Canadian to fall apart, but I guess it's the loss of value of oil that's really beating it up bad. Whereas all the other ranges have been, let's see, let's throw the Swiss one up there. I think we lost this file, and we just are slowly implementing the ranges again. And for the longest time, it was that range. It was the bottom of this thing right here. And that was the range for a long time, for a year and a half, 2 years. And now it's reestablished itself with this inflation and interest rate problem inside a bigger range from this to there. And we'll see how that acts. All right. Where are we going from here, traders? If anybody wants to see anything, say so. And I'm going to drift now over to save workspace and close that. And we're going to drift over to the where are we going? We're going over to well, we'll go to the metals market. So there is gold. You see gold actually it's almost getting plus for the day. Let's see how it looks over here on J4X. It's trying to turn. It's kind of bouncing it around, trying to put some pressure on it, I see. Still down, but on the edge. Then we go take a look at silver. Remember, gold has come this morning from the 33 area, and we're trading at 52, so it's almost $19 higher from its lows. And then we go over to the silver, right there. And silver's trying to do the same thing. And you can see here it's, in a daily sell like gold for a bunch of days and a bunch of weeks. It's been in the sell since up in this area. And they got it back up to that area, and now it's become like a resistance area. It's a ceiling. And then we go over to copper, and you can see copper doing the same gig. It's the same type of pressure. You see the sell. It's in a weekly sell here for a week. The strangest, when we look at copper, that's a third commodity we look at, and we compare it to another country, and that is China. And the strangest headline was yesterday. I don't know if anybody has seen some of these things, or, it's pretty much been debunked. But the fact that they even talk about it is unique in its own way. That's for sure. It does. It freaks me out in many ways. Let's see. Let's go there. Let me go there and take a look. I want to show you. It's a headline, and I don't want to give you a heads up. I want to say it out. I want to show it to you because it was such a wild, crazy headline that I just gotta just say it to you. It just gotta. Let's see, where is it at here? There we go. Here it comes. Where do you see this headline? Not there, not there. There it is. Oh, where do you see this picture of him? Oh my God. Oh, they've gotten rid of the picture too. Have they got rid of the picture? That's what I was worried about. They're going to get rid of the picture. Okay. So I'm going to have to let's see if I can find it. No, they've removed it from the article now. Here's the beginning article. I'm going to show it to you. There's the picture. Look at that. About the rumors of Chinese coup. Look at the face they had. They've gotten rid of that. It's not part of the article anymore. Here's the article. I don't know if any of you saw this or, about those rumors of a Chinese coup. This was over the weekend. And, they've taken a lot of the pictures out. They got somebody in Tiananmen Square or something like that. Supposedly paratroopers had been dropped in. It says elite paratroopers have wrestled control of the gate and cunningly disguised as 5 middle-aged dudes who always stand there. Obviously, there is no coup going on. You can see that there's no paratroopers there. But the fact that rumor even got going is funny in its own right, that there was a Chinese coup. That alone is, to me, is astonishing. Just shows you how bad things are there. But again, we see this. We see copper trying to take out the lows. There it is right there. And we're in a weekly sell, and so it has something to do with the yuan. And we don't trust the yuan, so we don't even show you it. It's trading in the 7.2s now. Put it up on J4X real quick for you. But the Chinese yuan is just a very odd beast. It's almost like someone forgot to tell them what to do at times. I mean, look at that. During all that wild inflation, this is only just a month and a half, of September and it's not even October yet. It's just half some of August and September, all right? But for a long while, it didn't even pay attention that there was inflation until someone woke them up. When Powell came back here in April, the Jackson Hole stuff, not Jackson Hole, to talk about Jackson Hole for August, they finally started to show inflation compared to all the other currencies that have been on this wild ride. Whereas the yen just sat there, and then someone said, hey, in China, they thought, we better make this look like we're paying attention too. So it's gone from 6.75 up to 7.1, basically. So not a lot. I mean, you got to figure the in the same time period, I think we've seen the dollar Turkish lira go from like 13 to to like let's see right there. Someone just asked me a question on another line system, so let me just responding, just responding. Let's see. Oh no, it's not there. So let's do this. It's over here somewhere. That's what it is. There we go. Oh, you're right. Let me just straighten that out. $9.40. Just had to answer that one. There we go. Just had to do that. All right. So, if any of you hear about that coup, let me know. But it just blew my mind. I was like, wow, wow. Just the fact that they do that, because you got to figure whoever started that stuff is going to be punished dramatically. Okay. From there we go to, let's take a look at platinum this morning. See what the spread is between gold and platinum at this point. So platinum is trading at 8.5, 8.57 to be exact at the moment. It's dropped to about $75 over the last 4 days. Platinum and then gold is trading at 16.5. So it's like an $800 spread now. It's been up like around $1,000. So, they're moving it back down, that's for sure. All right, from there, and we were close to getting into the weekly buy. We were over the weekly buy last week in the beginning of the week. I thought, okay, here we go. Remember, I was saying to everybody here, we get into the daily buy on silver or gold, you can get long because we're seeing a weekly buy in platinum. And then sure enough, they smashed it. It was like, no, thank you. No, thank you. Sorry. We were wrong. Didn't mean to mess you up. So, from there, what else we got going on here? I guess that's about it when it comes to the metal side. Let's just take a look at the energies real quick. There's a spot oil. It is trying to get back into the plus. We're heading back for that $80, but we were as low today as $77.21. On Friday, it was $78.04. And then over here, let's put Brent up there. There's the Brent. Brent is trading in the 86s, almost 87 now. It's trying to lift up. And you can see that pressure on it. And then we take a look at Nat Gas right there. There's a November gas, and it's been gliding down. We hope Europe is seeing some relief from that. And you can see there, we're a second week now going into a sell. And let's put it up over here. We look at that Spanish company. It's been trading under 26 now for like a week and a half, which is very impressive right there. Yeah, look at that. It's challenging the 25 area now. So as this company loses value, we have to assume that the price of natural gas must be dropping in their country or in Europe or so forth. That's the only way we can say it. Janos was saying he's been asking them to put European natural gas up on a chart because it should be, but I guess they don't have any inventory. If you can't, they'd have to make it a cash contract. I guess that would be the best way. Yeah, you know what, Janos, if you're still listening, tell them not put it out there like an index. create a natural gas index and put it up on there, and it delivers in cash. This way, there's no delivery problem because, I mean, you know that the thing is going to have major problems of delivery. Yeah, I imagine it does. Yeah, I mean, you just can't throw these index. I developed a couple, like, we created cash currency pair trades back in like 81, 82. And it took a while for us to organize that. The clearing, the delivery. Back in those days, major currencies were 2-day delivery. And you had to hedge the delivery even. And then the Asian currencies were a 3-day delivery. And, it's not easy to set up the delivery system and, get all the clearinghouses organized. And it'd be a contract for the difference. That would be smart. Because I would love to see because that's traded in the United States. That's an arbitrage. That was the old arbitrage. European gas versus American gas. That would be a perfect contract to be able to follow. I love that. What a great idea, Janos. Good job. So, all right, I guess we got to figure out a title for this. The U.S. market opens up in about, About a minute and 50 seconds. So, we started off talking about, what did we start talking about in the beginning? Fundamentals. So I guess we could label it something like fundamentals. The pressure on trading fundamentals. How's that? Does that make any sense, Janos? Fundamentals and the pressure on trading them. Does that sound like a good one? Or financial fundamentals and versus trading them. Let's see. I'll try that. Let's see. Fundamentals. Let's use that keyboard. Is that spelled right even? Let's see. Fundamental. That's what's nice about doing it on my pad. It does the spell check. Let's see. We were talking about it too at one point. The fundamentals. Okay, fundamentals. Let's see if it does it. It looks like it. Yeah, there you go. Fundamentals. Trading. I see fundamentals trading is waking up. How's that? Might be too big. Something like that. How's that sound? All right, traders. We're going to cut out of here, and we will. Let's show you. Before we go, we'll show you the short term. What's going on with the U.S. stock indices? Let's put them up there. Right there. Impatient issues? How do you deal with impatient issues? What do you mean? Like, you mean if someone asks for, has a question and they're being unfriendly, or patients waiting for a trade in trading? Okay. Well, we're big fans of a combination of the hard delta, the pairs trade, and binaries or options. So we don't really get trapped too much with waiting for it to come in our favor, because like here you asked a good question. Here's a good example for it. Here's the S&P 500. This is trading intraday right now. Okay, we went into a buy right here, Right there we went into the buy. And you can see it went up in value. We went into a sell right here, and we're still in the sell, and we're being patient. And if it goes into the buy right here, then now it's trying to get into a buy. Let's see. And looks like it's going to go into a buy, and we cover. We just accept it. Now you're long for this trade and this trade, and you have your stops, and you just you just take your money and go. So automation of orders and writing down the full plan of action before getting in a trade at all. Yes, exactly. So it's a combination. That's what's really good about the binary options at Dukascopy, is that you can basically get the execution. Like now, here we go again. We just went into a sell here. Okay. And that now the reason why Kimbo we show you that is that when you go and look at the basics, here is the daily and the weekly. So it went into a sell here, and you can see it's gone down in value. We went into a weekly sell. The bigger signal was here, and you wouldn't take any of the daily buys. You'd only take the daily sells and trade them. And so we always say that if you have a system, your intraday should match your weekly and daily of accuracy. Plan your work and work your plan. Be proactive, not reactive. Exactly. I agree, Robin. And it exactly fits what Giannis is saying. Automation of orders. Write down the full plan of action before getting in a trade to begin with. Exactly. They're the only ways to go, Kimbo. And just like, I don't know where you are in the world, but when you watch your local sports team that you're following, they don't just show up on the day to play that sport. They're usually training all week long. Okay? Trading is like, it is a athletic event. And you need, when Yano says automation of the orders and writing down the full plan of action, that's just like the local football team training 4 and 5 days a week and drawing out plans and strategies. Or the cricket team, or the Australian League football, or whatever you're watching in sports, or cricket. In other words, or it's American baseball, or whatever it is. It doesn't basketball, whatever sport it is. They don't just show up on the day to play the other team. They practice, and when they have off, they practice. So I hope that answered your question, and we will be here tomorrow, same time, same channel. So, happy trails to you until we meet again, which will be Tuesday. Happy trails to you, to all our trading friends. All right, traders, later. Arrivederci.